Anybody bought like a house for like 50 grand or 100 grand off, and then you immediately have that equity? What if you could do that on 200 units? That's the next step. I want to show you guys as much as I can how to show up in a way that's conducive to being able to ask for that 7 or 8 figure commitment. I've sourced well into 9 figures in private capital, and I've done it for real estate. I've done it for finance companies. I've done it for consumer services, and I've even done a few startups for capital raising. So my preference is obviously real estate and sometimes operating businesses, but I don't want you guys to think this is a real estate training event. You will see real estate as the backbone of it, but the real training here is to show you guys the capital raising part of the business. This deal right here, Ashwood Park, my last fund, we bought this thing in June of this year. The seller wanted $16 million originally for this property last fall. He had it under contract for just shy of 16 million. Fell out of contract, as you guys remember, interest rates went up and went up and went up. Fell out of contract at almost 16, went back under contract at 14.5. That guy couldn't close because they were paying too much money. We came in and initially they're like, okay, 13 is our rock bottom price. It was 13 or 12.6 or whatever. I don't even remember anymore. I said, okay, no problem. I'm at 12. Well, look, we're a fund. We're going to close. Just to be able to say we're a fund, we're going to close, their confidence here. What is the difference of you saying, well, how are you going to close? Oh, well, I know all these guys. We're going to put the money together. Trust me, I'll figure it out. How much negotiating do I have then? Very little, right? My answer is we're a fund. We're closing. Here's our price. So finally they relented. It was 11.8 million. They signed back. Then we went into due diligence and then we paid 11.1. And that's what we actually paid for it when we closed. So it's almost $5 million. Right? In savings, that's built-in equity. Anybody bought like a house for like 50 grand or 100 grand off, and then you immediately have that equity? What if you could do that on 200 units? That's the next step. You have to have a fund. You have to have a structure that allows you to immediately act and do things like this. So my goal for you guys is to teach you how to be the dream client for accredited investors, for institutional investors, for people that can write big checks. I want to show you guys as much as I can how to show up in a way that's conducive to being able to ask for that 7 or 8 figure commitment. Because that's what it is. Look, getting checks for 50 or 100 grand is great and it's fantastic. And you guys have done it with your last development, your project. You pick up, accredited investors one at a time. But ultimately, you want to build yourself to a point where you can eventually ask for 7 figure, 8 figure, maybe one day 9 figure capital commitment. Like that's life-changing stuff. And for those of you who are like, well, I have to give away more of my company. Okay. Would you rather keep 50% of $1 million deal or 10% of $100 million deal or 20% of $100 million deal? They're both going to take you the same amount of time. If not, one will take you more energy. The amount of time I put into buying these 144 units is probably what somebody would put into buying a duplex. Honestly, there are a few more reports and a few more expenses, but ultimately it's still the same closing process. It's still financing. It's still paperwork. It's still legal. It's still due diligence. You still got trades. So $6.5 million we were able to save. Actually, that's CAD. USD was about 5 million. I guess we converted it to CAD. We literally sliced $5 million USD off this purchase. So if all I do is don't add any value and I stabilize it, that's 5. I increase the rents by $200-300. 5 becomes fill in the blank. 7, 8, 9, I don't know. That's the power of having a fund. That's the power of being able to marshal capital and resources. It is incredibly powerful, guys. If you had a fund or if you had a structure that you could go to and raise capital with, how much more aggressive would you guys be when you write offers? Right? Think about yourself before you spent your own money as an investor, okay? For those of you who had bought a bunch of properties with your own money, when you had that money in the bank and it was just your cash and you were writing offers, you were probably a little bit of a bully, right? When you were writing your offers, you're probably pretty aggressive, pushing for terms because you knew you had the money in the bank, right? If you could replicate that feeling times 10, times 100, that's the goal. Like just the sheer fact of having access to the capital, you can negotiate. My God, can you negotiate? They ask you POF. By the way, it's not plenty of fish, okay? That's proof of funds. Because you'll get a text, but few of you didn't get that. Eh? Plenty of fish is a dating. That's okay. How do I know about that? I'm 38 years old. That's how I know about that. My point is that when you have access to that capital, you can really push boundaries. And that last transaction, literally, that guy says to me, he goes, well, your offer is fill in the blank, favorite 4-letter word, blah, 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 blah. I go, here's the bank account. Here's the contract. So being in a position where you have the cash, dig your well before you're thirsty. That's the whole method. Now, the challenge you guys are all going to have in this room, and you might be having these thoughts is, well, but how do I raise the money if I don't have the deal yet? But then if I have the deal, how do I, right? Because it's like, I don't have the deal, but I want to get the money. So how do I get the money before I get the deal? And that is one of the limitations you have when you're doing promissory notes or joint ventures, is without a deal, there's no discussion. So with a fund and a fund structure, you can structure it in a way legally where you're able to accept funds on things you're going to do in the future. It's a really important distinction. And by building in the discipline into running a fund or building a fund, what you actually end up doing is when you're ready to scale beyond that initial thing, you already have the foundation in place to go from 10 million to 25 to 50 to 100. The foundation's already there. It's part of the prerequisite of building a fund. So my opinion, the deal I just showed you guys, if you were in a position to pull the trigger on something that even added $1 million or $2 million to your net worth, I mean, would that drastically change how you live your life today? Of course it would. For some of you, maybe the needle is 5 million, maybe it's 10, whatever that amount is. I'm of the opinion that one deal, one opportunity will literally change how you do everything your entire life. The thing is, are you going to be ready when that opportunity presents itself? That's the one thing. And that's the power of, again, being able to build a fund. I've done over 12 individual real estate acquisitions. These were technically funds, but I just call them real estate I did them as funds for the most part. The 30 million plus, the plus is because I don't remember, and I just didn't feel like adding it up, but it's a lot. On the equity side, this doesn't count mortgages. So none of these amounts count mortgages. You know how people tell you they've done millions of dollars in transactions? This is just equity. Really important distinction. So that's the actual commercial real estate transactions. I've done 4 funds over $100 million in equity. I've done 5 institutional term sheets ranging between $25 and $100 million. And I've had a buyout offer for a company at $100 million valuation. It fell through because COVID happened, and that changed the entire world. Man, that kicked my ass. I'm not going to lie to you guys, that COVID kicked my ass. You know how you saw the gyms, or you saw the guys running the restaurants or whatever, they just got thrown for a loop. When COVID happened, I was not ready for it with this business, and unfortunately it kicked my ass. But had COVID not happened, maybe for another 6 months, sometimes the timing has a lot to do with it too. But the reason why I'm sharing this with you guys is because I want you guys to appreciate that I'm coming from a position of service. I'm trying to show you what's worked for me and what hasn't worked for me. Capital raising. There's 4 levels of competence, in my opinion. The first one is what's called unconscious incompetence. So in other words, you don't know that you don't know. You don't know that you don't know. I'll give you an example of unconscious incompetence, okay? I'm 225 pounds now. I got up to about 255 or 260 pounds. I didn't know I was 260 pounds until I crossed the street and someone yelled, "Hey, fat ass, get off the road." And I'm like, me? How? I bought a scale. Literally. This is years ago. I bought a scale, I put it down, I stepped on it. I'm like, no, that's broken. Swear to God, I went back to the store, like, this scale's broken. Tried another one, the same thing, same number. That I was unconsciously unaware of the fact that I was so heavy. You understand? Like, it was a blinder that I didn't even know I didn't have. So some of you, in the context of capital raising, you may be unconsciously incompetent. Like, you literally don't know that you don't know. That's the first level. The second level is consciously incompetent. So now you know that you don't know. So I now knew that I was 30 or 40 pounds overweight. If the scale is right there, I am now consciously incompetent. I know that I'm overweight. Like, I'm now aware I'm dealing with this. My concern for you guys in the capital raising context is that you will become consciously incompetent when you see the deal of a lifetime pass you by. That's when it'll hit you, if it hasn't already. because you'll see something that you'll be like, man, because in your brain, you're like, this makes sense. There's a hospital going in here. There's the GO train. There's this happening, whatever it is. Leo, you've probably had it many times over the years, right? Where you're just like, this is so obvious, right? And then you're sitting there and you're like, well, what do I do with this information? Because again, if all you have is a hammer, everything looks like a nail. Well, what if you can't hammer this one thing because financing's not available? Maybe you need to remediate the ground. Maybe there's something here. Maybe there's something here. Maybe you truly need to figure out how to put in equity, and this deal is only available for 10 days. Well, if you don't have the structure, if you don't have the tools, what are you going to do about it? Absolutely nothing. So you become consciously incompetent. The next step is I want to help you guys become consciously competent. And this is an ongoing process. This is something that you'll get a lot out of this weekend, but beyond this weekend, applying these tools, being part of a community, whether it's our community, other communities, is something that's going to be of service to you because you're going to continue to refine your ability to execute whatever that thing is. And the beautiful thing about this training is it doesn't matter if you're trying to build 200-300 units in the Maritimes, if you're trying to buy apartment buildings in the US like me, or if you're trying to buy commercial plazas in Southern Ontario or Industrial Blaze, or if you're trying to open up a car rental, whatever it is you're trying to do, as long as you understand how to structure and raise the capital, you can do it. Also, funds allow you to charge fees in very different ways than you can or can't or shouldn't in joint ventures or promissory notes, which is also a gray area for some people. In funds, it's very clear. It's very black and white. And then hopefully one day over a period of time, you become unconsciously competent. Like one of my best friends does Ironmans. He is unconsciously incompetent. The guy can go run a full marathon and, just get out of bed and go run a full marathon. I need like 6 months to go run a half marathon. By the way, just to give you guys a full loop on that overweight story, the first thing I did after that, when I knew that I was overweight, I went and signed up for an Ironman a year later. I had never swam. I didn't have a bike. And I wasn't exactly in a runner physique, but I did it because I forced myself to get into something. So, question, how much capital do you want to raise in the next 12 months? 100 million? Okay. This isn't a contest. This isn't an auction, by the way. So we got 100. So I love the 100. And these guys are already M1 members, so they're already mentally a little bit further ahead. But if somebody's never done it before, you're thinking, man, if I could even get 5 million in the door, right? That would be the next piece. Exactly. So look, this program is best designed for people that want to raise at least $5 to $10 million. You can do this in 12 months. You can be on track to do it in a month. You can be on track to do it in one check. It's all a function of how much energy and effort you put into it, but this is possible. I've done it. The last fund before COVID, the fund, I've done a lot of funds. One of the funds before COVID, we did 70 million in less than 2 years, or 68 million in less than 2 years. So it's there. It's all there for you guys. Another fund was 15 million. Another fund was like, it's there. This is all possible, guys. You just have to be able to structure it and see it through. So what's it going to mean to you when you can actually get that capital? Well, so it's interesting with Tom and Kush is because they just did a large raise on a 200 plus unit development. You guys have a ton of other opportunities that are now coming to you because you closed on this thing, right? So as soon as you close on something, people are like, wait, you're real? Here's everything, like here's all the, you see that too as a realtor, right? Building a fund, running a fund allows you to have the gold. Also allows you to consistently be out there raising money from your investors. Whereas a JV or a promissory note, you're like always trying to play matchmaker and just, it's a lot of wheel spinning. It's like the equivalent of, you ever see those cars on the road that looks like a Lamborghini, but it's like a Fiat with like a Lamborghini cover on it? Yeah, like it looks like a Lambo until you take it to the track, right? And then you realize it's a Fiat or a Fiero or whatever, right? That's the problem with not having a fund, is once you actually understand the fund model, you can legitimately go on the track. And then you'll have opportunities that keep coming at you. And as soon as brokers know that you run a fund, it's a totally different game. The mindset, the best way I've found to summarize the mindset is in the context of be, do, and have. So the three types of personalities that concept impacts are the victim, the worker, and the winner. Now, the victim, by the way, just so you guys know, all three of those personalities are present in you, and you, and you, and me. Like, for example, this morning I woke up like a victim, okay, because my daughter was up early, so I was up early. And, the victim says things like, why did this happen to me? How come this? How come that? More importantly, in the context of be, do, have, the victim says things like, oh, well, that's easy for you, Marcin, because you have context, you have the knowledge, you have the experience, you have the track record. If I had those things, I could do what you're doing, and then I would be successful, or I would be happy. So the victim puts the lack of having as the reason why they're not doing anything about it, why they can't do anything. You guys understand? So literally, because you don't have something, you're immediately a victim. You can't do anything about it. I don't have this, therefore I can't do anything. I don't have any money, so I can't buy any real estate. Okay. Well, if I ever let money stop me, I would have never bought my first property. I would have never bought my first company. I would have never fill in the blank last thing I did. You figure it out, right? So that's the victim mentality. Most of you are not the victim, but sometimes we end up having a pity party for ourselves. Like, hey, this is hard. This sucks. Like, I've been trying this for, if only I had, the right assistant, if only I had the right spouse, if only I had the right partner, if only I had the right whatever, fill in the blank. We all fall into that victim mentality sometimes. Like this morning, I'm like, oh, if we only had a nanny here in Toronto, she could have dealt with my daughter, blah, 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 blah. Like we all have it, right? Like it's just at 3 a.m, it seemed like a reasonable thought, right? Like it's just, she comes in with a full, anyway, you guys have kids, so you guys get it. Anyway, so that's the victim in the context of capital raising. The next person is the worker. So the worker will say things like, oh, I got to get this done because I got to have this commission check, because once I get this commission check, I can be more present with my kids. I can be more available to my spouse. I can be, happy. I can be relaxed. So the worker is constantly having to do something in order to get something before they can feel a certain way. I lived my 20s this way, my entire 20s, and a good portion of my early 30s now that I think about it, where it was always the next thing, the next deal, the next opportunity, the next outcome, the next thing I had to do, because I equated the person I was to the things I did. Does that make sense? Like that was my identity. There are people very close to me in my life that are very high up in certain organizations, public and private, and their identity is rooted in that identity. Pardon me, their identity is rooted in that role. So they're like, once they retire, like one of them I'm really worried about because I don't know what this person's going to do, because their identity is all consumed in that role, right? Because they live in that worker state. They need to do X to have the notoriety, to feel valued, to be, that person. That's their role. So that's the worker mentality. The one that hits different in the context of capital raising is the victor. And the victor thinks not, well, that's easy for you, Marcin, or that's easy for you guys, or, I could do that if I had the same experience they had, or blah, 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 blah. The victor thinks in the context of this: who do I need to become to be able to do what's required to have the outcome I want? This is easier said than done, but this is the one thing that continues to be my North Star, my compass in my life, because I literally have this above my desk. And it's one of those things that whenever I come across something I can't handle, I ask myself the question of, okay, well, what am I missing? Who do I need to know? Who do I need to become? What am I not seeing to solve this issue? Because some other people have solved this issue. It's there. So what am I missing? Like, what is it about me that I am missing that is not giving me the ability to execute this correctly? And it's a different thought process, because you go from being a victim to a victor. You are now empowered to do something about it. And the reason why I go through this with you guys here this weekend is because as I share other things, at some point your cup is just going to go full and you're going to go, okay, I'm out. Like, you won't, hopefully you don't stand up and say that, but in your head, you're going to be like, all right, like, my cup's full. This isn't for me. It's too much. I feel that way when I play video games with kids, like I get my ass kicked at every level. I can't compete. Like it's just too much to learn, right? Like it's just immediately, like you're frustrated, you're out, you're done, right? My whole thing with you guys here is that's fine, but just be aware of those limiting thoughts you have. This is really important for capital raising because I'm telling you right now, it is not the deal that will sell you. It is you that will sell the deal. So, question for you guys. Who do I need to become if you've never raised any money to raise your first $1 million? So the next piece, your mindset. We talked about it, the victim, the worker, and the winner. So how do you address that mindset once you identify it? Well, it all starts with reframing your thoughts. So the number one issue people have in their mind is they think things like, what if I fail? Well, I think that all the time, guys. I just don't say it that way. I say, how do I manage my risk? Like this, I see risk. How do I manage my risk? So it's the same thing. You guys understand? Like it's the same thought. What if I fail? Because there's risk. Okay, how do I manage my risk? So this one empowers me to do something about it. I can take action on this. I can actually address the devil or the demon or the issue that I'm potentially facing. Whereas if I just say something like, what if I fail? Well, okay, well, that doesn't give me the room to do anything. Another question, I don't know where to start. Who can I learn from to feel more confident? I'm 17, 18 years old. I'm slugging real estate signs because for me at that age, I thought real estate brokers had it all figured out. And I still learned a lot. It was my way in the business. Now at my age, I pay for mentorship. I was just telling Tom and Kush, I'm part of a mastermind. We're just heading down to Costa Rica here for about a week. Then I've got another mastermind. I mean, I spent a lot of money on this stuff. Easily 6 figures a year, like easily. I'm not saying that's what you need to do. It's just what I do. Because for me, it's too expensive to make the mistake. You guys understand? Like it's too expensive, not just financially, but time-wise. Like I don't want the 6-month learning curve. I'll pay for the speed of the time today. And I'll listen to someone else that went through that same experience and they'll say a few things where I'm immediately like, okay, shit, scrap that, do this, change this. I got on a call with a mentor Thursday about something. I shared my screen. Within 60 seconds, you tore me apart, repositioned a whole bunch of stuff, gone. Probably saved me 20 grand in 30 seconds. Things that I'm unconsciously incompetent. I didn't know that I didn't know certain things. You guys understand? Like I didn't know. So the value there is for me tremendous. Never done this before. Who can I work with to become more credible? All right. There's a reason why people buy into franchises or licensing agreements or different organizations or opportunities or take internships or go work at banks or do whatever it is, because you're looking for that credibility. You're looking for that track record. You're looking for that experience. You're trying to figure out whose wagon you can hitch yourself to. I got a job in PE when I was 20 or 21. I showed up in Calgary. I didn't even know what they were going to pay me. I didn't care. I'm serious. I didn't ask for a contract. I didn't ask for anything. I just wanted to show up before they changed their mind. Honestly, I was just like, they're like, okay, you're in. I'm like, great. I'll be there next week. They're like, yeah, we're in Calgary. I'm like, beautiful. They're like, you're in Toronto. I'm like, yeah, I'm going that way anyway. I'll figure it out. Then I went on, it wasn't Google Maps yet, it was MapQuest. And I'm like, shit, where is this Calgary? Like I'd never been there before. I Googled it. I'm like, holy crap, that's a long drive. I had no idea, right? I was so committed to I didn't care. You understand? I would have gone to Nukpuk Tuk Nunavut to go work there. I didn't care. I wanted the experience. I wanted the credibility because I immediately went from doing what I did to buying 200-300 unit apartment buildings. That credibility, like, how do you buy this? How do you buy that experience? You don't. So I just said yes. After 3 months, I finally asked to start getting paid. Literally, I didn't get paid for 3 months. They didn't know that they didn't put me on the payroll because I just started showing up. And then after I firmly implanted myself in the company and started adding value, I'm like, hey, so am I going to start getting paid? They're like, you don't get paid? I'm like, no. They're like, oh, go talk to, Jimmy so-and-so or whatever. I'm like, I walk in, he goes, he looks at me, he laughs. He goes, we haven't paid you for 3 months. I'm like, no. He goes, where's your contract? I'm like, you guys haven't given me one. Because they were a fast growing PE firm. They were growing so fast, they didn't even notice They didn't legally hire him. I didn't care. You guys understand? I wasn't trying to be a piker. I wasn't trying to create any friction over the fact that, God forbid, there was a misunderstanding about them hiring me. All right. Like, I wanted a desk first because I didn't have the university degree. I didn't have the credit. I didn't belong in the room. You guys understand? Like, I didn't belong in that office. I didn't have the degree. I didn't have the credentials. Everybody was supposed to be done university. I dropped out of university because I had the opportunity. I just didn't want anybody to review my file again and be like, so who, because the question is like, whose son are you? Whose daughter are you? I didn't want any of those things. So what is it that you're willing to do? So that's the piece. I don't know anybody with money. Why not say this? How can I add more value to become worth knowing? So it goes on and on and on and on. Now, if you're at the you guys aren't all cows, okay? If you're at the multifamily conference, you saw this. So you know what the biggest difference between cows and buffaloes are? One of the biggest differences? When there's a thunderstorm, the cows run from the thunderstorm. They run away. You know what ends up happening? Thunderstorms move, right? So they end up chasing the cows. So they end up getting wet longer. Literally what happens. You can Google, you can fact check me after this. Cows literally run from the storm. Whereas a buffalo, they intuitively know that the safest place in a storm is in the eye of the storm. So all buffaloes, bison, run into storms. They literally charge right into the storm. And what ends up happening is they end up running out of the storm. The very thing they're afraid of, they charge right at it. And what ends up happening is the storm moves away and they're fine. So the question for you guys is, what storms are you running from? What are the things that you know you need to learn in this side of the fence that you continue to run from? Because the more you run from it, the more it will chase you. The more it will remind you that that is the thing that you're missing. Whatever that thing is. You don't know how to read financial statements? You're going to you're going to keep getting your ass kicked. You're going to keep getting conned. You're going to keep losing money. Don't know how to talk to people? You're going to keep getting shit deals. Don't know how to negotiate? You're going to keep getting outflanked. Now, if you're comfortable and you're happy with doing JVs, great. God bless. Do them. There's nothing wrong with that. It's just, I'd rather do one deal a year than 50.